What's up, guys, and welcome back to another episode of the Community Corner podcast. I'm Arnav.
And I'm Nikhil, and today we're going to be diving into the dynamic and often mystifying world of finance. So we're going to be talking about hedge funds, private equity, and venture capital, kind of talking about some of the differences between those three types of firms and just really breaking it down for y'all.
Wow, today sounds like a fun episode. So these financial instruments, right, they play a crucial role in the global economy, but they can also be very complex and elusive. And today we're here to break down what they are and how they operate.
For sure. So we're going to be kind of exploring how you guys can make it big in these fields. You know, they're known for like high stakes and a lot of times high pay. You know, it's long hours, but it is high pay. And there's also potential, again, for significant returns in this industry. So Arnav, do you want to talk about kind of just what even these three types of firms even are?
Yeah, I'm going to just give like a real quick, simple explanation, right? So first, we're going to start off with the hedge fund. It's like an investment fund that pools capital from accredited individuals or institutional investors and invests in a variety of assets, right? Which kind of includes often with complex strategies to maximize returns. It's kind of like a financial advisor, but on like a larger scale with millions and millions of shares going out and high frequency trading like integrated throughout. The second one was private equity. It involves investing directly in private companies, often to restructure or grow them before selling for a profit. And so this is like kind of investing in the early stage of a company, kind of like those initial angel investments in order to get a very like low price per share and like investing big into like a startup, which can end up blowing up, right? And the third one is venture capital, which is kind of focused on focusing on investing in the early stage with high potential startups. The difference between private equity and venture capital, however, is private equity is directly into private companies that kind of aren't in the early stage, but kind of restructuring them in order to grow them. But venture capital directly goes towards the startups and like at the early stages in order to maximize the amount of output. But it's also very high risk, high reward because startups do have a lot of volatile in terms of how much success that they can achieve. And so they can easily crash and burn, which is detrimental to the amount of like millions of dollars going into the early stages of investment.
Yeah, so I mean, to help you guys kind of understand, you know, this at a more in-depth level. So in hedge funds, strategies like long short equity, where you buy undervalued stocks and sell overvalued ones, can be successful. Now, in private equity, a buyout of struggling company and turning it around has seen, you know, hefty success. Now, in venture capital, success often comes from identifying and investing in a startup that grows to become a major player. So that's kind of like, you know, very easy way to simplify this down to kind of a one sentence line of what success looks like in these companies. So
and so we kind of like delve into like what they are, but how does one make it big in this field? It's like, how would I acquire a job and become big in this field?
I think it's kind of a combination of deep market knowledge, right? As well as risk management skills, and sometimes it's kind of a bit of luck, I think.
For sure.
And maybe not even just luck, but just kind of your ability to network and understand market trends. I think one thing that's kind of, that's important to understand with the business field is that I like to see the business field as something that's not as filtered as a lot of other fields. You know, to go to, you know, for example, if you want to become a doctor, you've got to go through 4 years of, you know, undergrad, you've got to take your MCAT, you've got to go through all this years of schooling up to, you know, upwards of 10, 12 years versus, you know, getting a degree in finance or econ, which is required to go here is only 4 years. It's not as filtered, and I think because of that, it kind of creates more competition once you're in the workplace. There's a lot more people who are here, and so I think with that, it kind of comes down to things like networking, where you just kind of got to know the people to get an internship or get something else, you know.
100%. That's actually a really good note because a lot of these other like industries need technical skills. Like for computer science, an interview would be mainly like coding skills. How technical are you? How efficient are you with that? But a lot of the thing with business is people skills, right? How well are you able to talk, and how good of a person you are, basically, and how
well do you work with people?
Exactly, and how that can reflect in a conversation when the time is crucial. So that's why it's really important for businesses, and that's kind of how you can get high up in that field.
Right, and I mean, obviously, still the content is still, you know, obviously the majority part of this, right? It's very important to understand market trends. Having a very keen eye for potential is also very crucial, right? That's kind of where the money's going to be at, right? Investing in a company early on, before they've reached that point of success, and helping them, you know, get there.
And even bad investment decisions can lead to substantial losses. So it's really important to weigh out the risk and reward in these investments and kind of like weigh out your options. But there are other disruptors or innovators in these fields that have changed the game, right? So in recent years, we've seen the rise of tech-focused venture capital firms and private equity firms that directly specialize in turnarounds of tech companies, right? And so hedge funds are increasingly using AI and machine learning to predict the market trends and kind of like locate which companies that they should target in order to, turn around and maximize their potential, or who have maximized potential, and so in order to maximize their profits and success rate in the future.
Yeah, I think that's one thing that's really important to understand is the kind of innovation aspect of these sectors. I think these are very, constantly growing field, especially with the incorporation of AI and machine learning and all the different forms of tech. So I think staying ahead of the market trends and technological advancements is very crucial for success in these highly competitive fields.
Mm-hmm. And kind of like for our listeners out there who want to pursue a career in these areas, what advice would you give to them, Nikhil?
I think you want to start by building a strong foundation in finance and economics. I know often for a lot of these careers, you can major in either finance or econ. It really doesn't matter. And internships, again, and networking are invaluable because that kind of gives you what I like to call pre-experience, right? The experience, if you've heard of the cycle of, you come to your first job and it's like, you come to your first job interview and it's like, well, what experience do you have? But it's your first job, so that is supposed to be the first experience, right? And so I think to kind of break that cycle, you want to do internships, do networking, kind of work your way outside of the traditional path of getting your degree and then applying for a job, and kind of break that cycle by doing those kind of extra things, right? And I think you have to be prepared to work hard. Honestly, a lot of the careers here are very, especially in finance in general, it's long hours. It's high pay, but it is long hours, and you have to stay informed consistently on even things like global economic trends. All those things really affect your whatever businesses you're investing in, or any of these three firms we're talking about. And be open to continuously learning and adapting. We mentioned the tech aspect of this, the AI, the ML, all those things are constantly adapting. And what that means is that you've got to constantly adapt to those adaptations in the first place as well.
And this all might scare you, but there are so many success stories that might like inspire you, right? So many people who are angel investors went in early towards like early companies such as like Facebook, like Peter Thiel, who is a very famous angel investor, who's a billionaire now, right? Just from his like initial investments in early companies such as Facebook and other prominent companies, and even individuals who started their own venture capital firms after successful tech careers, to traders who climbed the ranks in hedge funds to make landmark deals. And so these stories are testaments to where skill, perseverance, and a bit of timing and luck can lead to.
Yeah, I mean, it's definitely a world of high risk, right? But also, with that risk comes the potential for reward, the potential for high success, right? So some final thoughts for y'all. So remember that in hedge funds, private equity, and venture capital, risk and reward go hand in hand. You might have to take that extra risk of investing in a company early on, that you don't even know if they're going to be successful or not. And sometimes that can play out well, sometimes it may not. So stay curious, stay driven, and who knows, you might be the next big name in finance, y'all.
No, let us know. I think on that note, we're kind of wrapping up our episode. Thank you so much for our viewers out there, for listeners tuning in. We appreciate every single view that you guys give us, every single minute you guys listen on us. Thank you so much for this insightful journey into high stakes finance. So on that note, until next time, keep learning and exploring. Peace.
Peace.